Mark Draper here with Andrew Clifford, Chief Investment Officer of Platinum Asset Management. Andrew is responsible for the Platinum Asia Fund as well as part of the Platinum International Fund. I noticed in the most recent quarterly review that you wrote in the Platinum Asia Fund, you've taken a position in the Power Company of India, I think it's called, which is a transmission business, which basically means, as I understand it, they own the poles and the wires in India.
Yeah, just for the long distance part of the business. So it's not the distribution in your local suburb, if you like, but it's the long distance.
Long-term transport of electricity. So
yeah.
That's a pretty boring sort of business, really. In terms of what do you see there?
I guess there's been a part of the Indian market that has been hit very hard, and that is that anything related that is interest rate sensitive. And this is a classic boring old utility. So they invest in the transmission system, and they essentially get a guaranteed 15% return on it. So it is really dull, and it is like a bond. But if
a bond that pays 15%.
Yes, but a bond that pays 15%. Now, when we're buying it, we're buying it on a P of 11. So if we turn that into a bond yield, while it's giving you, while they get 15%, we're buying it at a rate where it's only 9%, let's say. But they get to keep investing all their profits in expanding the transmission system, what will be for a very long time to come. And so they're reinvesting those profits at 15%. And that's a pretty nice, return. Yes, it's a bit boring. It's not exactly what we look for in emerging markets, but our past experience has been that these type of assets can actually get very, very high ratings. So if you think about the enthusiasm we've seen, at different times in Australia, say for motorways and the very low yields they trade on, this thing's I think pretty interesting. We only get around a bit over a 2% dividend yield, but it will grow. So it is very much, the problem in India at the moment is inflation is stubbornly high and interest rates are high, but as that comes down again, I think you'll get a very big re-rating. There's a few other issues around it. There will be deregulation at some point, and that guaranteed return may not always be available to them, but certainly for the next 5 years, there's they have very significant opportunities to invest at that guaranteed rate of return. So a different one, but nevertheless quite nice. And
I'm not knocking boring either, by the way, Andrew.
and in a world where there's sort of a huge amount of uncertainty, those sort of nice easy ones are good to have in the portfolio.
Yeah, it's a good bit of ballast, and probably the key risk to something like that, I would have thought, is a change of or regulatory risk, for want of a better word, of the government changing the rules. How do you actually go about assessing that in a country like India?
So, it's interesting because you certainly that is the risk, and what we've had in India in this utility sector, not just here but also in power generation, long established rules around the schemes that govern these entities. And generally, they do get tweaked, and it's normally a process in all of these things that every 5 years there'll be some slight modification, and it will relate to interest rates and what's needed as an incentive. But in the past, the government actually has increased the return because they actually need money to come into the sector. And India's a funny place. It's both a benefit and a curse, but they do have a reasonable legal system where a lot of these type of rights are relatively enforceable. Interestingly, when you look at similar assets in China, it's almost as if there is no contract governing the rates of return on a utility type asset, and the government changes it at their whim. And so, you have a much more uncertain outcome in these type of assets in a place like China. So it is a bit of a study in the environment and looking at the history of how these things have been dealt with.
There's certainly a lot to it, and which is why we trust you guys to look after some of our money, and very much appreciate the job you're doing. Thanks for your time, Andrew.
Okay, thank you.